Going, Andy? How you doing?
Ready to rock.
Good, good. I see your screen. I hear you. If you guys, anybody out there are not hearing or seeing the screen, it might be on your end, but I see and hear you just fine, Jamie.
Awesome. Well, I want to thank everybody for taking the time to come hear what we have to say today. Happy Monday to everybody. Here we are, all-time highs, all fun and games. So before we get started, I just want to take care of the lawyers real quick here. Just want to make sure that everybody in attendance here today knows that we are distributors of information. Now, if you ever need investment advice or some other type of screaming ambulance noise coming through, hold on. So if you do need investment advice, please seek out a registered advisor, registered investment advisor, licensed stockbroker. There are plenty of people out there that can help you out with those things if you need them, but everything that we share with you here today is strictly for educational purposes only. All right, so let's take a look here. Before we get into the agenda today, since we do have pretty large sampling of people who are new to the product or might be kicking the tires, just want to let everybody know that not only do we have the best state-of-the-art scanning technology out there, but we've built a nice community around that technology. So, obviously today it's myself and Steve on Mondays. Then Steve takes the reins on Tuesdays with Trade of the Week. We follow that up with Wednesdays with Dan and Brad and the Q&A webinar as well. We round things out with Andy's Trading Studio on Thursdays, and I ride shotgun with Andy. And, of course, every day, day in, day out, we do have the free trading room, which is hosted by Barry Anderson. So if you have not been taking advantage of that resource, by all means, you're selling yourself short. So Barry does a great job at moderating every day and calling out trades. So that community is growing by leaps and bounds as well. So if you have not checked it out, by all means, get on in there. All right, so today pretty much, we try to stick to the things that are working. Of course, we always let Steve, our in-house excellent technician, kind of sum up the market and what's happening on the larger scale. Of course, today's a little bit different as the past previous days have been as we creep slowly and slowly into uncharted territory. Then we'll talk about the Holly action for today, which was a little bit out of the ordinary. She still posted positive gains, and by the way, 9 consecutive days in a row that Holly the AI has posted gains. So Holly's doing exactly what we hoped she would do. And of course, we'll get into how her performance was a little bit different than what we've been seeing in the past 8 sessions. And then we're going to get into, big up day. Where were the sustained movers up? So we're going to be reviewing the big cap upside movers that we've showcased a few other times in the past because they're working. And as Steve and I like to say, it might get boring, it might be a little Groundhog Day-ish, but as long as things are working, that's what we're going to keep hitting on. And then if we do have time at the very end, we will move on to some price alerts for you guys as well. So Steve, if you're ready over there, I'll pass it over to you.
Sure, send it over.
Rod Markets here.
Red Rover, send the desktop right over.
And you should have it.
All right. Should be looking at the SPY daily, what we've been marking up a lot of lately. For those of you who were in this webinar last Monday, we were working with these candles back here. And I kind of mentioned that this was the level that we were flirting with, the previous breakout. We had a nice breakout of 3 days closing above, and we got soft and mushy again back into the range, but then we broke back out. And I believe when we last spoke last Monday, we had 1, 2, or 3 of these candles here that were attempting to reclose above this important level in the spiders. We'll call it 228.35. At the time, I had said, the fact that we were back above the range and holding a 3rd day of closure, I had said verbatim, I think, the path of least resistance is still upward. And boy, was I shocked at exactly how easy the path of least resistance was upward. Really, really nice breakout from nice congestion. So hopefully, you're not trying to rub your hands together and figure out how to short this market because that really hasn't been working. If you've got a good short strategy or a day trading strategy, more power to you. But in the bigger picture, every dip just seems to be bought, and then we had basically another nice breakout here. I'll just leave these lines as is. I think once again it's poignant to note that what was further or what was prior resistance back here became future support for the most part, especially last week. 4 days in a row closing right at basically the low end of that range was the prior support. So many times price action will do this. It'll break out and then come back and retest. And a lot of times, even in individual stocks with these types of moves, you can use these pullbacks to your advantage for entries rather than being the first person that bought. Use the pullback. But if I look around, I'm noticing, the Qs are still leading. I mean, they broke out their upper range, and the last 3 days, gap. Boy, that's just incredible momentum. I don't know how long it's going to last, but that's the direction that we're going. And not lastly, but next to last, the diamond's also a really nice breakout after doing the same thing, closing 1, 2, 3, 4 days or so above its prior resistance, all-time high breakout, slop around, come back and test it, and then trading above it and closing above it for a few days certainly helped. Okay, but what's interesting is this third ETF that we always look at in our market assessment here, and this is the IWM, which is basically the Russell 2000, which is our small cap universe index. And it's just not having the same love over there in the small cap land, as you can see. We essentially took out all-time highs intraday this afternoon in IWM, but look, we came right back and closed right back in the range. So IWM, is not leading as it was early on after the election. It's now lagging, and I think it's going to dovetail nicely to what Jamie's going to talk a little bit about further up in the webinar. This is a big cap rally. And we'll see some other clues and some other things that are going to kind of demonstrate why we feel this is just only a big cap rally right now. But this IWM gives us a great visual example that, it's really not participating. Where's our 3 bars of gap out and breakout like we have in the diamonds and the Qs and the SPY? Well, we don't have that in the Russell 2000. So there's definitely a lag factor going on right now with the small caps. Now, there's really no prediction to be made other than the market has a way of rotating. When the big caps get tired, we may start to see the IWM break out, and we may have some more love coming back for the small caps again. But for right now, there's absolutely no love in the small cap world as the diamonds creep up to new highs, the SPY creeps up to new highs, and the Qs, you just can't stop them. So that's the one takeaway that I've found, other than the fact that we are in blue skies here. There is no look left anymore. Looking left is nothing but blue skies. So that's what we have. It's quite possible that at some point we could see some pullbacks in the market. Maybe we see a pullback to this line, as I was mentioning earlier. Prior resistance could become future support. Could be the case as well. Maybe the diamonds will wind up coming back maybe to something like these levels, that little wedge that tiny range that it broke out of. So there's no rule that says we have to keep going up every day. At some point the market's going to breathe, and this is where we start to look for maybe pullbacks and levels of entry after a pullback. It's really hard to come in, if this was a stock, to come in and buy that third up day as if you were buying this as a stock, because as we all know, it doesn't take long before the volatility kicks back in. It's 3 steps forward and 2.5 steps back in this market in many stocks, the way they trade. So train's left the station, feels a little bit chasey up here, but nonetheless there could be some breathers in the market coming forward. And I would keep an eye on this IWM to see if this thing breaks out. And then you can focus your attention on the small caps, as if the rotation continues and the buyers continue, at some point these small caps are going to wind up looking a bit on sale to somebody out there. So that's my story, and I'm sticking to it. Anything you want to add?
Good stuff, Steve. No, and those charts you illustrated, we are going to notice some correlations between, say, Holly performance. Why did what happened with Holly today happen? And then follow that up with, okay, well, if the small caps aren't following through, when we look at these charts, again, of course, on the SPY, the broader average, just whoosh, 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 and today, just nothing but, upside, everything from the small gap that we had, which, I don't know, not so small, and then just a nice, pull to the north for the remainder of the day, which is why the Holly performance is very interesting today. And then we can parallel that with, well, what was, where were the stocks today where the moves were sustained to the north, okay? And that is in the big caps. And for those of you who attend on the regulars, you know that we were on this probably about 2 weeks ago, pumping out these two alert windows that showed nothing but the big caps, and the opportunity that was coming out of those guys, and that still continues today, and how we could have even used that information today to predict, or to, better put in a good container our expectations, okay? After the first 30 minutes or the first hour was up, what to expect. And by watching a few of these windows, we could have had some really reasonable expectations. So let's go ahead and talk about Holly here. So first thing to point out, and of course I noticed this over the weekend after the analysis was done for Friday, or after the Friday close, and that is the sheer number of strategies that made the final cut for Holly today. So we've got 14 strategies in here. All of these guys made the cut after the analysis on Friday.
Notice which ones didn't fire.
Oh yeah, we 4 shorts out of the 14, not one short trade. And then everybody else had a pretty fair representation today. Not one guy going crazy with 10 or 15 trades, but pretty smooth consistency throughout the strategies, that we saw today. Now, what we're going to focus on first here is the difference between the risk off and risk on chart. And one thing to point out, risk off is accurate. Risk on, we had some little glitch in the database today, so this was all pretty much erroneous data. Now, fortunately, I snapped some screenshots as the day progressed. So I just pulled the screenshot over. This is what risk on looked like earlier in the day. So we did have a nice ascension early on, not what we're seeing right here. We apologize for that, but sometimes it happens. It should be fixed by tomorrow. But as we can see, it was kind of a battle between risk off and risk on, and then eventually one takes the lead. And I'm sure a lot of you who subscribe to the premium, just like myself, and Steve and I were discussing this before the webinar started, it was like risk off was doing pretty good, and then risk on started to get a lead, and everybody's like, okay, well, we've seen this before, the market's busting out, the train's leaving the station, risk on's probably just going to, kill it today. But of course, we were surprised, because not only did risk on not end up winning the day, risk off won the day, and risk on took quite a beating.
Maybe it begs the question. I'm sure there's somebody in our large audience today who's not following risk on, risk off. So let's just head that question off and deal with it. So
perfect.
Know what we're talking about.
Right. So a lot of people are under the misconception that they have to pick risk on or risk off at the beginning of the session, when that's not the case. Risk off and risk on are just showing you risk off. Holly's in her most conservative mode. What does that mean? Well, she's going to stick to her rule set, meaning once she enters a trade, profit target, stop loss, timed hold. Those are 3 factors why she can exit a trade, in addition to what we see over here in the exit reason column, profit save or time stop, which gives Holly the extra option. If she's up in a trade, she can close that trade out if she feels the stock is getting too volatile to sit in. And the primary reason why we developed this was to keep Holly from letting winners turn into losers. On the other side of that coin, she can cut a loss earlier before it gets down to her stop loss. So all in all, there are only 5 reasons why Holly will exit a trade. Now, if risk off is simply Holly sticking to her rules like any trader would, what is risk on? Risk on is simply holding that position to the close, regardless, not having any time to hold, profit targets, stop losses. Now, The way I like to approach risk off and risk on is on a trade-by-trade basis based on what we see happening. So typically, when we sort by risk on after the day is over, for example, CLS is a perfect example of going you, me, anybody else interacting with Holly, deciding to go risk on. So if we take a closer look at this trade, we're looking at the 5-minute intraday here. The blue box, notice that when I double click here, not only does it populate my charts with CLLS, but it gives me the blueprint for the Holly trade. Entry price 22.84 here. We can see 22.84 is highlighted here in the blue box, and we can easily draw a line right across for easy reference. So Holly calls a long buy right here. Now, right off the bat, we know that it's Count de Monet that is triggering the trade, and we can reference and look and see what are the expectations coming out of this strategy today. For anything that comes out of here, we've got a 59.84% chance of success from this strategy today. And this win percentage is static coming into the session based on the previous 40-day back test. So pushing 60% there. Now, we've also made available this column. Okay, that's all fine and good, Jamie. We know what expectations are with the strategy, but how did it do today? Well, Count de Monet pumped out 4 trades today and operated at 100%. 4-4. Same with this guy, same with this guy. And of course, these guys down here, not only did they underperform, but, pretty significantly. 2 trades here, no winners. 1 trade here, no winners. So, going back to the CLLS trade here, once we get the entry signal here, it doesn't just immediately rocket up, and sometimes they do, and those are always nice, but it kind of takes a little pullback here and just kind of hugs the entry line. Now, just keep in mind, statistical probability that's generated from these strategies is good for the day, and a lot of the times, you'll get this type of action. We'll come back through the signal price and back up and down through it maybe 2 or 3 or 4 times. But from my experience, that's always a good thing, Hugging the entry line in this little consolidation pattern here is actually what I like to see, because there's a couple of other factors that jump out at me on this chart pattern. Number one, if we're a daily range break person, and what I mean by range break is simply getting outside of the previously established highs and lows for the day. So we can see CLLS put its low in on this opening bar, quickly runs up here, puts a high in, and then backs off. Now, as it's approaching that high again, that actually happens to correspond with Holly calling the play right before it gets there. So we've got statistical probability on our side, and then, of course, here we're also noticing that it's corresponding with a range break, which, if you like that type of pattern, even better. And then we get the sideways correlation here, and then the stock gathers some traction, and we have profit potential all the way up to this point. So Holly, on her risk off, and of course I always like to throw a exit time column up here, so let me just retrieve that real quick here. I thought I had it up already. Okay, so now we can see on the CLLS trade, Holly gets in at 7:11, and we can see from the count strategy here that these trades are designed around a certain hold time. In this case, it's 2 hours before the close. You can see that some of these are 30 minutes, 45, or we can designate specific time. So the goal with this count strategy is to hold until 2 hours before the close. But we can see Holly got out on the profit save about 23, 24 minutes after she got into the trade in the 735 bar, which is only right here, 730 to 735. So Holly gets out in this area because she doesn't like the little micro volatility that's going on. So she books her 8 cents. Now, if we're in the trade with Holly and we see her getting out, and this, of course, I have to loop back around, which we say this all the time, but it warrants saying over and over again, is there a reason to get out of this trade?
Mm-hmm.
We're in the money. We've got our stop loss down here, and once again, Holly gives you all these factors, where to get in, where to get out if it doesn't go our way. So taking into consideration, the stop loss is way down here. Never even comes close, you know. Of course, we all want things sooner than later, but having to wait out this little period here, not only is that a good sign in my opinion, but then we do get rewarded, and it never comes close to our stop loss. So if we see Holly getting out here, and we decide there's no reason to get out of this trade, I know Holly's getting out, but I am choosing to hold it.
Patience. It's so hard, but it's so key to making things work for you.
That's risk on and risk off, demystified. You're deciding to stay in it because you think it has more merit? Yes.
Impatient versus patient. Yes.
Right.
Well, of course, we still have to. Of course, we still have to manage our risk. You know, there's no reason to think that if it didn't work, that we're in control. I mean, we know where our downside is. The way people lose a lot of money, especially newer traders, is wind up taking a bunch of big hits. You will never ever see the AI Holly take a big hit. It's always going to be a minimized management of risk. And even at that, there's always the possibility that this trade could have gone down and stopped out, and then come back up. So as a reminder, when you see these Holly trades, they're basically good for the day. And you want to kind of keep your eye on them because sometimes they can be a little volatile, maybe stop out. But if it's a chart that you like or something that resonates with you, you know, keep an eye on it. Use price alerts, use markups to try and keep tabs on these things. But yes, this one worked, and patience was a virtue in this particular case, but it's not always a virtue. So we always have to know what's our plan B if this doesn't work. You know, we've got to not become a deer in the headlights. I made the mistake way back when I first started trading, falling in love with 3 or 4 stocks and kept them on my blotter every day, and they just sucked the life and the opportunity cost right out of me every single day. Holding on to big albatrosses or big losers around your neck. It's not good. So when these trades don't work, and there will be occasions when they don't, you've really just got to shift your hat into risk management mode and make sure that you're not taking any more risk than you need to in a particular trade like this. So I just wanted to jump in and talk about risk management when things don't go the direction we want them to go.
Absolutely, and to even take the demystification process one step further, you can always do both, right? So just for easy math purposes, if we're taking 200 shares of these trades, we get traction, and Holly says I'm getting out. Peel out of the first lot with her. Hold the other half, the other 100 shares, back to a flat, back to your original stop loss to try to capture this extra alpha. The longer you stay in that trade, as opposed to getting out, the more alpha was generated. And Holly, her strong suit is the statistical probability, the statistically weighted entries. We can't do that. I mean, we can, but not near along the lines or the magnitude of this model that does all the heavy lifting before us. So her strong suit is delivering to you statistically weighted entries. Now, Holly's not the best at exiting. This is the classic example. You don't even you wouldn't even have had to been in the chair that long as a trader to kind of feel comfortable in this area right here. So using our chart reading skills for exits combined with Holly's statistically weighted entries, that's the way to go right now. That's the man working with the machine, each doing what their skill set dictates. All right, so that's the CLS trade. Now, once again, another example here of Holly. We got risk off. She booked her 29-cent profit. Stayed in the trade about an hour and a half here. So the 11 o'clock bar up here, she pretty much tagged this one about as good as you can from an automated hold. She gets out right here. Of course, 13.12, left a little bit of skin on the table there, maybe another 12 or 13 cents. But played that one about as perfectly as you can, was in it at the peak, and then it's just a simple question of, well, if you were in this trade and you're getting up here and you're thinking to yourself, well, is it time for me to get out? I went risk on with Holly, or we're still in the trade. And of course, a lot of the times to temper our expectations, once we're in that good trade and it's moving up or down if it's a short, then we prescribe to a pretty simple philosophy here when it comes to generating reasonable expectations. So we're in the trade here, woohoo, we're in the money. Well, where do we think about maybe lightening the load a little bit? Well, if we look to the left on the daily, as we were approaching these levels right here, getting to the top of that candle, well, it just happens to be that we're going to be butting up against the top of these prior resistance levels, right? And of course, as if by magic, that's where the thing backed off today. So with Holly and the statistically weighted entries, with our chart reading skills, we can be a pretty good team, right? She's that trader that's going to do her thing every day, and we can learn a lot from Holly, not just in these individual trades, but also when we're looking at the ebb and the flow of the risk on and the risk off. Today risk off was pretty much green from the very beginning, and onward, right? Peaking out at a max of about $1.45 at the high there.
Yeah, just to continue on what you said, some of the things we can glean from the AI as traders is watching a statistically, perfect, unemotional idea generation, whatever you want to call it. Beyond the individual names and the levels, like I had mentioned earlier when we first came on, what was Holly telling us today about direction? Well, probably not the best time to start going short. Well, that's always interesting. The other days, there might be a day where Holly doesn't make her first suggested trade for 90 minutes after the open, and that can be a long time. But during that 90 minutes, what that should tell you is, okay, this is interesting. The AI is not really seeing a statistical advantage to be firing off trades at the moment. Maybe I should be sitting on my hands a little bit more too. And then we have a day like today where we've got a pretty ample amount of strategies. They're all going in one direction. The AI is seeing something out there. So trade count, directional bias, long or short, and trade count. Are there a lot of trades on the blotter? Are there just a few trades? And what can you glean from that, knowing that this system knows a lot more than we do when we take out the emotional quotient? These strategies that come through every evening are the result of about over 1 million backtest practice trades and tweaks and filters and refilters and rejiggering and tightening or loosening other filters or times of day, things like that the AI works into the matrix. So, what comes out tomorrow, one strategy may be even a little different than what it was a week ago, even though it's the same strategy. And I'll just leave you guys with this before I turn it back to Jamie, because I notice this a lot. If you ever see the AI, go into the 10 o'clock hour, East Coast time, with no trades, and then maybe something happens. Maybe something happens under the scene where if you all of a sudden see 5 or 6 or 3 or 4, for that matter, short sells come out, then there's your directional bias. More often than not, that little early indicator seems to kind of drag the market down with it, because what's happening is under the surface you're seeing a lot of short strategies and weakness triggering, and therefore the AI will trigger those particular strategies with the highest probability at that point. And so if you notice a blank alert window and all of a sudden within 10 minutes there's 4 or 5 shorts in there, start paying attention to that directional bias. If you're short, maybe that gives you confidence to hang in there a little longer. If you're long, maybe you want to lighten up a little bit, or maybe you just want to start, putting on some shorts. But notice when that happens, when there's nothing going on and then a bunch of trades come out at once. If they're all in one direction, chances are that's kind of an early warning system to what the indexes are about ready to do in the same direction.
That's right, Steve. And of course, we could even call what we saw this morning right out of the hopper here. In the first hour, look at all these trades. In the 9:35 Eastern to 10:43. I mean, just long. So not one short trade on this blotter today. So yeah, a lot of times Holly can give us that directional bias, at different times of the day. Now, one thing I'd like to point out today, though, is that, once again, circling back around, risk on did not win the day. All of these stocks went up nicely, but they could not hold it. You know, these guys are still up, but look at what we have here, all these greens down here that Holly made money exercising, you know, risk off, and had she held them, look what would have happened today. So definitely the risk management was keeping us out of trouble today. And when we see this happening, it's in direct contrast to what we've been seeing happening. Okay? So why did it play out like this today? Well, there's no way to say for sure, but if we start looking at the stocks, CELLS, and here's my single stock window today with some key metrics about each and every stock, right? Market cap, under 1 billion for CELLS. CSIQ, under 1 billion, all right? And there were a few large caps on here today like FDC, but a lot of these stocks were not the big caps. And as Steve pointed out on the Russell 2000 chart, it hit a roof today and it backed off. And that's exactly what we're seeing in these stocks that Holly was in today. So if they weren't moving today, but yet the market was just up and away all day on the on the money escalator, then where were the stocks that kept on going all day and maybe backed off a little bit, maybe took a 25% pullback, but then turned and burned and set new highs? How would we have known, and what would we have used, to find those things? Well, that's where this guy comes into the picture. And of course, this is just a slide of it, and I'll pull up the real windows here, and this is kind of stretched out. I don't know if you could even really read that, but let's just pull up the real guys here. Get Holly out of the way here. No offense, Holly. Okay, so these two guys right here. Been talking about these guys for a while now. And these are the big cap stocks that are hitting highs and hitting lows, right? Once again, not a lot of rocket science going on in these configurations. They're very simple, but they can tell you a whole lot, right? So just to recap here, what are these guys looking at? Now, of course, we're going to be predominantly focused on the upside today. However, in a market where we were just going up all day, there were some stocks that were going down, and of course, it's going to be the opposite. Stocks hitting low with extreme market cap and extreme volume as the day progresses. So both of these guys are the same. One just got the new high attached. One's got the new low attached. Exact same filter set. And we're going about filtering for volume in kind of an unorthodox manner here, because most of you are used to seeing average daily volume, things of that nature, maybe some relative volume, all right? But here, we're leaving average daily volume completely out of the picture, and we're focusing on market cap of 5.4 billion or higher. Now, the 1 minute volume has to be 3 times or greater. So with these simple parameters in place, and by the way, this is a de facto way to weed out ETFs and iShares by employing the earnings per share.
Nice little workaround trick there. ETFs don't have earnings, so we got to spoof the system to clear out any ETFs. It's a nice little hack.
It is, and it's a lot easier than trying to maintain a list and constantly update it. All right, so obviously, if we kind of expand these windows out, this window out, and just kind of take a peek at the history, and look at the frequency here. Look how many symbols are coming through here, and the frequency at which they're coming through. This is a very, very high quality information stream. Are we trying to take every trade that comes through here? No, we're not. If the pattern is conducive, yes. And we've already removed the volume criteria from the equation. If they weren't doing the high volume, they wouldn't be coming through here. So before we get on, I'm going to backtrack a little bit here, getting ahead of myself. So first off, I'm going to pull this guy over. Now this is a compare count window. Compare count windows allow us to load up opposing strategies, and this little guy is going to keep a count for us so that we can basically figure out where the path of least resistance is. So if I right-click and hit Configure here, we've got a green data side and a red data side, and we can see here I've imported this version into the green side, and the red one is in the red side here. So every time a tick comes through here, this guy keeps count. And this is what helps us derive expectations in the opening 15-30 minutes of, okay, what can I expect from the markets? Now if I can find my sheet here one more time, I'm going to show you guys. This is what, and this says 37% here, 63% green. 63% green, 37% red, and I snapped this screenshot roughly an hour, and about an hour and a half into the open. Hour and 40 minutes to be exact. We can see the timestamps right here, 8:11 Pacific Standard Time. All right. So, what is this telling us? Well, it's telling us in this little universe right here that after the first hour and a half, we're showing a huge bias to the upside in the big caps. 63% buying, 37% selling. Now, keep in mind, you only need 55%. If you notice 55% on any given day after the first 30 minutes or an hour, that's good enough to go. You know, there's definitely a bias there. But the higher, the better. We don't see these types of ratios very often. So if you get familiar with how to track this information, then you were way ahead of the pack very early on this morning, knowing that, hey, regardless of what's happening on the SPY, whether it's up, down, or flat, I know that where the party is on the buy side of the big caps today. That's where the money's playing today. That's where the volume is playing today, right? So that should be a question that you ask yourself each and every session. Where's the party? Because I don't care about going anywhere else, because that's where the activity is. That's where the volume is. That's where my charts are more likely to do what I think they're going to do. Less manipulation. What you have to keep in mind too is when there's institutional buying or selling in a stock, they can't just put an algorithm on there to run that stock. Hey, they have to bring in this guy. Some of you may be familiar with this term. He's called a market maker. So when they have big volume, they have to bring in a market maker. They can't just let a computer control the action. And guess what? Boys, girls, ladies and gentlemen, a human, much more predictable than an algorithm where they spend millions of dollars a month making sure it's the best of what it does. Well, different jobs for different things. When the volume is there, a guy has to be sitting there interacting with the system. So if we get tipped off early on that the big caps are where the party is, you're ahead of most of the crew out there. You've got that informational edge that you need, and in this market, that edge is going to change just about every day. So, how many stocks came through this ticker today? Well, I compiled a list earlier. And if we take a look at my 213 list today, we had 154 stocks coming through this alert window here from the open. Now what I've done is I've taken that list. Some of you may recognize this from a couple of weeks ago, but it's still working out the same way. So here are all of those big cap stocks. If they're over here, they closed at highs. So if they're green, they were up on the day. So out of all the stocks that were coming through here, this is the tail end. Only these guys out of 100, what did I say, 136, 135, the only ones that didn't finish positive were these guys down here out of 130 something stocks. So if you were fishing for the long side today and you were fishing in that stream, boy, you had a very, very good chance at any of these trades working for you on the long side today. And once again, you know, these are highly liquid stocks. We can, you know, I just resorted by the volume today in these things, and there you have it. So, you know, we've been noticing this for weeks. Money's flowing into the big caps. Now we're starting to see this reiterated from other news sources and whatnot. And I really do think that we were kind of early to this little phenomenon. Now, how long is it going to last? Don't know. But when it starts to wane, I'm going to know about it. Then I'll figure out where the next rotation is. So, using some very simple tools like this, a couple of compare count windows, alert windows, and some top lists, we can
Let's go back to that because there's a good question in real time here. Is that big caps mover similar to an advanced decline type stat?
Well, yeah, he's talking about the compare count window here.
Correct,
right?
yeah.
So, the tick on the NYC is advancers versus decliners, but it's on the broad markets, right? That includes everything. Stock that does 5,000 shares a day, stock that does 5 million shares a day. So see, this window right here allows us to create a custom tick based on the universe that we feel is important. Your own custom tick,
Hopefully that answers your question.
whatever this event is. So that answers the question.
I think so. And the second one is, of course, you're whetting everybody's appetite with those two turbo break up and down. Can you share those, drop the cloud links into the chat window for those who are interested and asking?
Absolutely. I'll make sure that I drop those in before we are done here.
Yeah, and Bill's asking again, do you have a small cap screen set up? I mean, essentially you would do the exact same thing, Bill. You would just tweak that one market cap filter to start searching for smaller cap stuff and leaving out the bigger cap stuff. Pretty simple. Yeah, exactly.
Right in here, that's the full value, 5.4 billion. You can create, and this is probably what I'm personally going to do, as we were discussing earlier, Steve, in order to figure out, well, when all the money's done rushing into the big caps, what's next? If we look at the big caps as like the head of the thing that is the snake that is the market, it's got to get above the line first, and then sure enough, when all the money's done pouring into the big caps, well then that second tier of stocks will probably rise up like a slinky or that snake body, wriggling around. The body's got to catch up to the head eventually, right? So very interesting what we can do here. Matter of fact, I could take one and go, okay, now I'm just going to do stocks between, 5.4 and 4 billion. Maybe I create another one that's, 2 to 4 billion. But you can slice it and dice it whichever way you see fit. And by all means, we could easily take this down to 5 or 4 billion and probably get similar results. Of course, that's the beautiful thing. Once you have these windows, you can start experimenting and going on those digital gold mining expeditions yourself using the backtester and whatnot.
Somebody's asking if you could just use the flip button, but in this case, I don't think the flip button is really necessary. All you need to do is just change the market caps, and maybe even if you're looking for small cap stuff, maybe you migrate that over to the maximum. So the maximum that you're ever going to see is maybe a value of 2 billion or 1 billion. So the flip necessarily wouldn't work perfectly in that respect. But it's a good question, Patricia, nonetheless. Many times, most often when you're dealing with an alert and a directional alert, that if you want to flip the direction, that's how you'd use the flip button. But in this case, we're just modifying a filter to try and keep out certain things and bring in other things.
Right, and typically it's this is going to sound silly, but it's only things that can be flipped that will be flipped. Like price can't be flipped, average daily volume can't be flipped, market cap.
It only inverts.
That would be a negative market cap of 5.4 billion, which wouldn't work. So the only thing that could be flipped in this case would be the new high turns into a new low, but we've already got that guy right here.
Yeah.
All right, just a quick time check. All right, I think we have time.
Why don't you drop those in before we forget? What do you think? We'll give people time. So while he's doing that, he's going to capture the cloud code for those alerts. And if you guys pay attention to your GoToMeeting toolbar, which everybody should have, there's a little plus window next to the chat box. If you click that plus window, it will open up the chat. And you can essentially, as soon as Jamie drops it in there, you'll see it. Just right-click and save the link address, or copy and paste it to a notepad or something where you can get a copy of that. And then all you got to do is just load from the cloud. It's real simple. If anybody's missing this live, you can always email info@trade-ideas.com and request the cloud link that you're seeing here in the live webinar. Not a problem. We'll get that out to you.
All right, almost done here. All right, those three are now officially in the chat window. So just copy and paste those cloud links. Should come right up for you.
I'll answer Eric's question. Do you have a step-by-step walkthrough on YouTube or one-on-ones? Yes to both your questions. I'll go ahead and drop a YouTube link in there as a 30-minute getting started video. And for anybody that does subscribe, you do get a free 1 hour with us to start you off and get you going in the right direction. So you'd be amazed what you can accomplish with just one-on-one screen sharing in 1 hour, and the amount of information you can learn, and we can point you in the right direction that suits your style and your method and whatnot. So yes to both of those, and while I'm thinking about it, I'll drop the YouTube link into your question there, Eric. Getting started.
All right, Stephen, as you can see, I've got a blank price alert window pulled up here, so we can queue up a couple of price alerts for the audience and throw that.
Yeah, we found a couple things of interest that we can talk about, and then what Jamie's going to do is he's going to set some price alerts, and then he's going to copy the price alerts so everybody that has the price alert feature can use the cloud to receive what we're going to mark up here. So let's start with this SRPT. There you go. Zoom in on the daily. For those of you who followed some of my strategies, I like the hammer candle, and I've got a scan called the washout bounce. And the washout bounce showed up only one time today with this particular candle. It has to have a down day prior, so there's the red candle coming into today from last Friday. And then we had a really nice washout, a full running of the stops, and then look left, and you'll see support on the daily. Look at that. The price action was digging down and making waves to try and lift the carpet and see if there was any stops to run below there. And there wasn't. And this is the perfect scenario for the washout bounce. So I would take the high of that candle today and mark that up tomorrow. And if that triggers, this could be a decent 2 or 3 day at the most swing trade. Typically when we have these washout candles like that, the volatility was washed out with it. So hopefully we'll have some calm trading and maybe a nice bidder in there, because the failure at that prior breakdown from last December, there was nothing, no follow through, but a nice big wick and a tail and a reversal all the way back up after a big day yesterday. These typically can be some decent reversal strategies, so pop that one in there.
All right, that one's all queued up, and I think we got
Twilio. Yeah, how are we going to approach this one? Let's zoom out a little bit. You know, though that red and green candle there in the middle, yeah, that's. I mean, we got real close to taking that out today. Now here's a little bit of extra on this. We're not just pulling this one out of thin air. This is coming from the trend change lubricant, and there is a giant short float. I know it says above 100. That's probably not correct, but nonetheless, there's sort of anomaly in there. There is a giant short float in TWLO, and I've seen a lot of other good traders that I respect today as well, kind of getting on the scent of this one. I've been watching it too, simply because it keeps showing up on that trend change lubricant. So if we have any follow through today, I'll let Jamie pick the number there at probably the top of that red candle like he's doing at the moment, and we'll put it a penny above there. And if that triggers, just know in the back of your mind that this could be a massive short squeeze. And, you know, let's take a look at the general market. Where's the general market going? Diamonds, Qs, S&P, all-time highs. You know, it's not popular to be a short seller right now. And if you're going to wind up sitting in stocks where there's a huge short float and you're not aware of it, then you might be susceptible, if you're a short seller, to getting squeezed. And this one looks like it could be on the way to a possible short squeeze. So we will leave that as it is. High short float, and we'll just lean on that if this thing triggers, to know that there should be some rocket fuel in this thing, because short sellers don't want to see them lose that level, for sure. Okay.
All right, so we've got that one queued up for 35.16 because the high of that was 35.15. All right.
We have an overnight gap scanner. Real quick, let me answer Lindsay. Yes, Jamie will put his marker on the pre-market channel follow his over on the left right there. That's the pre-market channel, and he's not going to click on it, but the pre-market will show you everything that's gapping up from overnight. It's very active pre-market, so that's the answer to your question, Lindsay. The next one is, what'd you pull up? Let's pull up FCX. You know, this one is a little bit more of a personal one. It's the trade of the week that's still working, but boy, we had a narrow range today. And I don't typically try to get too fundamental. I try and base all my decisions on the footprints in the sand, or what the candles are doing, what the price action is doing. But there's a giant case out there to be made. You guys are watching this dam explode in California. I mean, we need infrastructure, and there could be down the road some infrastructure coming. And I've been really keeping my eye on FCX. But what I noticed today, aside from all that conjecture, if you go to the 5-minute, we had a really, really tight range today. So what we're going to do is we're going to put a bookend on this particular setup here. Whether it goes higher or lower, that tiny, tiny, very tight range that we had today may resolve itself tomorrow in either direction. So I'm hoping it's up. I think it'll be up, but if not, tight ranges can usually set the stage for continued action. So we want to keep an eye on this one. I don't necessarily know if I want to short it, but I do want to see if it does break out. I'm more inclined to, again, you know, just because of what we've been talking about, the buyers and going long is what this market is working with right now. Going short, not so much. But that was a very
use a penny off today's high, Steve.
Yeah, 16 a penny off today's high, and just probably leave it at that.
All right.
What else did I have? I had WebMD, also from the trend change scanner, which has a high short component. Let me just check my numbers here. WebMD basically has 20% short the float of 37 million, roughly. Yeah, we're on the same page. And so what we see kind of here is a little gyrated reverse head and shoulders for the most part. That big dip down, go ahead and grab your cursor. Look, it took out those lows just like the last chart we looked at on the washout bounce hammer candle. Oh, and there's some more support. That's why we like to look left. Look at all that support. Well, we bounced off that level 1, 2, 3, 4 times was not the charm. We bounced off that support level, and we put in kind of a higher low and some sideways congestion. I love sideways congestion. And if we look left, just above those ranges from last month, we see where the supply is. So what Jamie will do is probably pick a candle, you know, going back a month there on that last ridge, that green candle probably in the middle of the D.
Here.
That's the one I would use right there. We'll use a penny tick above that. And you can see now that he's zoomed in, the price has come to that level and been rejected 3 times if you include today. So if the price moves through that level, then the short sellers are going to have a big decision to be made. And if you're somebody who wants to exploit a short squeeze, we don't care. Hopefully they stay stubborn and don't capitulate too quickly and give that maybe a nice 2 or 3 day move for that one.
And let's see, short float one more time on that one, Steve.
On WebMD is a 20.4.
All right, so 51.
All right, and lastly, is it TARO? Is that the one? Yeah, it's right below on my scanner. It's one below WebMD. So again, same mentality, looking for a level to break out through. Let's see, where would we put this one? I think, yeah, today's highs basically is what I wanted. And I want to call your attention to kind of a hammer candle the day before. Bit of an upside wick. A hammer typically is not going to have that upside wick, but what you had was a really nice flush of stops, probably run and then bought back, followed up by today's candle. So I'm really liking the last 2 candles here, and I'm liking that, again, it's 20.3% short the float, and that seems to be a line in the sand that the sellers have been holding, but they may not hold much longer. We shall see.
All right, that's 5 of them, Steve.
Okay, so now what he's going to do is drop those into the chat window just like before. And for those of you who have the price alerts premium feature, you can accept these as working alerts. Next Monday is a holiday, so we're not going to have a webinar next Monday, but we'll try and keep these in the vault and see what happened to them the next time we convene.
All right, Steve. Good stuff. A lot of good stuff in today's webinar, and should be an exciting day tomorrow. And we'll see what happens. So, Scott, if you're ready, we're ready to hear what kind of specials you have for everybody today.
Yeah, sounds good. So we're coming up on Valentine's Day, so that's the theme of the special. But before that, with that slide that you see on your screen now, we are still letting everyone know that we now have a podcast that comes out on Fridays. And you can find it real easily in any of the applications you use to normally listen to podcasts, whether that's iTunes or TuneIn or iHeart or Stitcher or Overcast, whatever your application is. Just search for Trade Ideas Podcast and you can find it and subscribe to it, and then you get the fresh podcast in your ears on Friday afternoon. So go ahead and do that. You'll also get a notification in your email on Fridays once that does go live, and you can listen online as well. But yeah, we'd appreciate it if you'd go ahead and take a chance to subscribe. So the code this week is Love Holly, and it's bigger savings than usual because of the holiday, because of Valentine's. So it saves a huge 20% off your first month or year of Trade Ideas, either premium or standard. So you need to use that code before the end of business on the 15th. It does expire. LOVEHOLLY, all caps like you see it, because it is case sensitive. And just do that when you check out, and take that. The savings off of a premium annual membership is like $378. So it's a good code to use. Take advantage of that before it goes away. And if you have any questions, you can email us info@trade-ideas.com. And of course, you can also find that code and this slide with the contact information as a handout in your handouts panel on your GoToWebinar interface. Click on that little plus next to where it says handouts to expand it, and click on the download, and you get these pages. You can follow Steve Gomez at Today Trader and Jamie Hodges at QuantBot. Those are on Twitter. Our CEO is at Trade Ideas 1, that's Dan Merkins, and the regular at Trade Ideas is the corporate one. We're on Facebook at facebook.com/TradeIdeasPro. If you follow us there, you'll find some new stuff posted there, and you can share that with your friends. You can reach out to Jamie or Steve directly using the emails on your screen, or email info@trade-ideas.com for any assistance. And if you're having any subscription or billing issues, you can always use the phone number and reach someone directly. Thanks, everyone. The recording will be up in a couple of hours, and you get an email reminder to the email address you used to register with. You get that email tomorrow around this time. Thanks, all. Have a good afternoon. Thanks, Jamie. Thanks, Steve.
Hey, thanks, everybody. Have a profitable week.
Thanks, all.